Inflation.
Inflation.
The inflation
Rate of inflation.
Inflation cooled significantly last month.
It's always good for a mega corporation's business. How on earth could inflation be good? And who exactly is celebrating while everyone else feels the pain? Luz, a 32-year-old mother, pushes a half-empty cart. She reaches for a carton of eggs and sees the price, $5.49. Her throat tightens. Just last year, it was a couple of dollars cheaper. She bites her lip, heart heavy, and gently places the eggs back on the shelf. She can't afford them today. She wonders, why is this happening? How can everything, rent, groceries, gas, be climbing out of reach? They tell her it's just economics, supply chain snarls, labor shortages. Everyone must tighten their belts. Was it really just bad luck and pandemic chaos, or something more? We set out to investigate, to follow the clues, if any, and find out who's pulling the strings. First, let's zoom out a bit and take a look at the stock market. It's a wealth machine, but not for everyone. According to Federal Reserve data, the wealthiest 10% of Americans own over 93% of all US stocks, while the bottom half of the population owns just 1%. In other words, the average working American, despite building the products, running the checkouts, and serving the meals, owns almost nothing of the companies they keep alive. So, when the government prints more money or pumps stimulus and inflation kicks in, those with their savings in cash see their purchasing power erode. But the wealthy, they don't sit on cash. They hold stocks, real estate, and other assets that rise with inflation. Prices go up, and often those assets' values go up right along with them. Inflation leads to higher prices on everything, which usually means higher revenue for many companies. We can even see it in the data. Inflation hits low-income households hardest because most of their meager wealth is in cash and wages, while higher-income households hold much more in assets that hedge against inflation. While you're paying $7 for eggs and wondering how to stretch this week's budget, someone else's investment portfolio is gaining value from those price increases. And Luz, she has no such cushion. She doesn't own a home. She doesn't have a 401k full of stocks. She lives paycheck to paycheck. For people like her, inflation is just pain. But for those who know how to play the system, who own pieces of that system, inflation can be a blessing. Their stocks, their properties, their commodities all leap upward as the cost of living rises. Meanwhile, those without assets find themselves stuck in a cycle of rising costs and stagnant wages, working harder each month just to tread water. But here's the thing. The wealthy don't only benefit from inflation as a happy accident. In some cases, they're actively exploiting it. As we followed the money, the true picture came into focus. We wanted to see just how much of a windfall this inflation wave was delivering to the people at the top. So, we pored over the financial data. The numbers revealed a jaw-dropping story. In 2021, as the world struggled to recover from the pandemic, US corporations collectively had their most profitable year in over 70 years, the highest corporate profit since 1950. And it wasn't just one or two companies. Across industries, from snack cakes to car parts to beer and beyond, executives were candidly telling investors that they were raising prices beyond their own increased costs. A Guardian analysis of 100 top US corporations found that last year the median profit jump was 49%, with many companies doubling their earnings, even as they charge customers more. Was the wealthy elite globally also making a killing from this inflationary period? In fact, that since 2020, roughly the pandemic and inflation years, the richest 1% of people worldwide captured nearly 2/3 of all new wealth created. It was as if the hardships of the many became the jackpot of a few. This was not mere coincidence, it was by design. We recall an analogy from detective stories. If a crime is committed, motive and opportunity are key to finding the culprit. We've seen the motive, the profit incentive, plain and simple. What about opportunity? How did they pull this off in broad daylight? Over the past 4 decades, industry after industry has consolidated into the hands of a few big players. In grocery retail, for instance, just a handful of companies dominate entire regions. In meatpacking, 4 companies control about 80% of all beef and poultry sales in the US. This is market power. With so few competitors, it's easy to silently coordinate price hikes. Whether by explicit collusion or simply a mutual understanding that all will raise prices, because what can consumers do? Leave for a competitor? But there's another crucial element: political power, the ability of the wealthy to shape policies and narratives. In a leaked report, we find staggering figures. Big business and trade groups engaged in over 2,600 lobbying efforts on Capitol Hill, specifically to block bills that aim to curb price gouging and profiteering. And that's not the end of it. Many of the richest also took direct action to profit from the turmoil. Take housing. Big institutional landlords, including Wall Street firms and private equity giants, saw the housing shortage and low interest rates as an opening to expand their empires. They swooped into suburban neighborhoods and bought up houses by the tens of thousands. In some cities, 1 in 5 homes for sale was being bought by institutional investors. Every home they grabbed was one less that a normal family could buy to live in, forcing more people into renting. It's a self-reinforcing cycle. By making essentials scarce or cornering a market, the wealthy can drive up prices and then collect the windfall from those higher prices. We saw this pattern in market after market. Rental cars. A couple of large companies own almost all the rental car brands you've heard of. After they sold off vehicles during the pandemic, a shortage ensued. So, when travel rebounded, those companies jacked up rental prices to astronomical levels, knowing travelers had little alternative. Baby formula. A single monopolistic factory shutdown led to a nationwide formula shortage and panic pricing for parents, because one company controlled such a huge share of the market. And we've already seen the case with energy and food commodities. By 2023, the term greedflation had entered the mainstream vocabulary. Even as some supply pressures eased and the wholesale costs started to level off, consumer prices stayed high. In fact, consumer inflation has gotten stubbornly stuck in the 3% range, rising unexpectedly for the last 2 months, even as wholesalers' prices stay flat or fall. In other words, excessive profit-taking is happening above the raw cost of goods. As Luz tucks her kids into bed that night, she wonders how she'll make next month's paycheck stretch. It might comfort her or infuriate her to know the truth, that it wasn't just bad luck or impersonal economic forces. It was by design. So, what does this mean for the future? If nothing changes, the wealth gap will only continue to widen. The system is designed to favor those who have the ability to influence it, while people like Luz will struggle to keep up. Either you join the rich, or you may just get left behind.